It's nice to be here once again with you, my student. Uh, Today, we want to look at the capital market. But before we look at capital market, we are going to look at our previous lesson. In our previous lesson, we discussed about, that's a week 6, we discussed about budget. And budget is the financial statement of estimated revenue and proposed expenditure of the government. So we discussed about we also discussed about the types of budget where we have a surplus budget that is estimated revenue is more than the proposed expenditure. Then we also discussed about the deficit budget. That is when the proposed expenditure is more than the estimated revenue. So as well, we also look at a balanced budget. The balanced budget where we have the balanced budget is when the demand, when the estimated revenue is equal to the proposed budget. We all look at this and we also discuss about the uses of budget and the function of budget. So we discussed about this in our previous lesson, but today let us look at the capital market. That's how I would say capital market. But before we proceed, I would like to share this with you. That's lesson objective. At the end of the lesson, students will be able to explain the capital market, list the benefit of capital market to individuals, then state the benefits of capital market to the economy and to the individual company component or company as well. So we're going to look at this today, my student. So let us be taking it one after the other. So let us look at the meaning of the capital market. This is a market for buying and selling of long-term debt. Buying, selling. You can buy and you can sell. Buy what long-term debts and equity-backed securities. So this long-term debt can be given long-term loan, and you are going to pay this loan after a year or within the range of one. So depend on the agreement between you and the finance houses that or the bank you want to collect this this loan from. So you can buy, you can sell, and you can also request for the loan. And this loan under the capital market has to be a long-term loan. And before you can be given this, it has to be backed with securities, with collaterals. You can't just be giving the long-term debts or long-term loan without having uh, the what in case when you default, when you are unable to pay, then what is stand in or what is going to replace that loan in case if you are unable to pay. So and it's also made up of institutions and structures for trading medium term and long term funds. And this capital market is for investing funds in debentures, combined debentures, combined shares, as well as bonds. So we'll be looking at this benefit one after the other. So let us look at the benefit of capital market to individuals. One, it provides opportunities for individuals to have instruments in different companies. It's going to provide an opportunity for the individual to have instruments in different companies. It's also a source of income as investor can now benefit from capital appreciation and dividend. So since you are going to collect, that dividend will serve as an income to an investors because since you are using your capital as an appreciation there, so it's going to serve as a dividend, it's going to serve as an income to an investor. And investor simply means your dividend will serve as an income to you if you are one of the investors in the capital market. Then individuals who invested fund in companies are entitled to share from the profit. So individual that invested his capital in companies will be entitled to share from the profit. So in case if the company is able to what realize what is called uh, profit, then this will be what will be shared to the individuals who are part uh, of this great opportunity in the company. So they will be part of them that will share from the profit. The investment in shares can be used. Investment will be used as collateral security to obtain the investment that you have as a share will be used to will be used as collateral security to obtain loan from the bank. Then the fifth one is bond pay interest income to the bond holders. So the interest will be on the bond that you collected. The interest will be there. Then let us look at the benefit of capital markets to government. Benefits of capital market to government. Resources are channeled to areas where they are required. So government try to distribute these resources to where they are needed. Then it also enable the government to raise long-term funds and to enable the government to raise long-term funds, and the government as well also collect long-term funds to enable them to finance development projects. So the revenue derived from the securities is subject to tax. So the revenue derived from the security is subject to tax. So they collect tax from the revenue that the government derive from the security. Then it provide alternative avenue to deficit financing. So any deficit financing, it provide an avenue for them. So let us look at the other benefits. Benefit of capital market to the economy. This economy. Let us look at what the capital market will be of benefit to the Nigerian economy. One, the market provide employment opportunities to different categories of people. Different people get employment opportunities in this aspect. Then it also provide avenue for foreign investors to bring in funds for investment. So an investor also bring in what is called uh, fund capital for the investment. Then capital market enhances efficient financial intermediation. So uh, it enhances financial intermediation there. Then it increases mobilization of savings. The savings, it increases the mobilization of savings as a result of volume of investment, economic growth, and development. So then benefit of capital market to individual companies. One, a company can raise enough capital from the market to expand the scope of its operation. They make sure that they raise enough capital from the market so in order to expand the scope of its operation. The investment in the stock market provides a source of income. So investment provides a source of income to the market of the capital to the capital market. Then thirdly, it enables the public to know the popularity of the company. It made the this capital market it makes individual to know them. That popularity is there. The so they enable to enable the public to know the popularity of the company. Then a coded company, that means they can buy shares on stock exchange market. If they can buy shares on stock exchange, this continue to operate for a long period of time in capital market. Not only the stock exchange market that you can buy, not only the secondary security market you can buy, they can also buy in uh, under the capital market as well. And if it's a quoted company, then this will continue to operate for a long period of time. So then we also have functions of the capital market functions of the capital market. One, it enables long-term fund to be mobilized for long-term fund. They make sure that they mobilize for long-term fund, and this long-term fund will be used for economic development of the country. So they use this mobilization fund for the development of the country. Then it provide local opportunities for borrowing. There's an opportunity for you to borrow, and they also lend long-term purpose. They also lend people money. They give them money. So under this capital market, then the market gives Nigerians the opportunity. to participate in the shares and ownership of foreign business. If it's foreign business, under the capital market, you give them the opportunity to participate in the shares, buying of shares, and they also become the ownership of the foreign business. Uh, and then the capital can be mobilized from both foreigners and not only the indigenous or capital that they mobilize for, also for the foreign capital and indigenous capital. So all these are combined together for the development of Nigerian economy. So both the foreign capital and indigenous capital, they combine this together for the development of the country. So that is then we also have what are the institutions of capital market. We have stock exchange. Stock exchange. Stock exchange is a well-organized market. What are they doing there? Uh, for buying, selling of existing shares, stock, and debenture. In case if you are not a student in commercial department, this will not be difficult for them. When I'm talking about stock exchange, it's a topic entirely in commerce. So stock exchange is an organized market which facilitates buy and selling. What are they doing there? Assisting the shares that have been there. They want the shareholder to come and subscribe or to buy stock or as well as the venture in the stock market. Both old and new security are traded. So they buy old security as well as new security are traded. Means simply they are buying, they buy and they sell the old and new security under the stock exchange market. So we also have the stock broking firm, and these are dealing members of the stock broking firm is the member of the stock exchange who buys and sells security on behalf of the investors or on behalf of the investing public. So they buy that stockbroking firm. They buy on behalf of the investing public, or they buy on behalf of the uh, they buy on behalf of the investors from the stock exchange. So he's a member of the stock exchange, but it's not is member of the stock exchange who buy and sell. They buy from stock exchange market and they sell on behalf to the public. So they buy from stock exchange and they also sell to the public for them to subscribe for the shares. So that is for the stock broking firm. So let us look at the other one. We have using houses. They examine in details the financial position of the company. They look at the financial position of the company, just like Central Bank of Nigeria. They look at the financial position of the different banks. The issue houses also look at the financial position of the company that deal with shares, that deal with the stock or the venture, whether they are to raise the funds or to evaluate the intended use of fund or what they are using the fund to do, or advise its clients on the most stable capital structure. So they give advice to the investor on how they can make use of their funds. So then we also have quoted companies, and quoted companies are companies whose shares are quoted on the stock exchange market. So their shares are quoted. You see their shares. When the shares are quoted, that means they can subscribe for that shares. If it's unquoted companies, that means the public are not entitled to buy or to sell shares under the stock exchange market. Examples are United Bank for Africa, RT, Briscoe, and Costain. All these are in this country. So they are the ones that are under the quoted companies. So my students in economics, this is just want to look at in this topic, that is capital market. Mind you, is a market buy and selling of security, or buy and selling of shares for a for long-term purpose or for long-term debt or equity basis. So this what before you can say you need this loan, there must be a collateral security. All these will be used in case you default. So it will be used for, and then for you to have the comprehensive knowledge on this, or for you to have the comprehensive notes on this topic, please let me make reference to this textbook, uh, uh, Economics for Senior Secondary School, Essential Economics for Senior Secondary School by Esan Code. So please use this textbook wisely and go to this school website. You will see your notes, your comprehensive notes there. Write this note in your notes. So until then we meet, may God be with you. Stay away from